Good afternoon, everyone. Mr. Smanto, tutor from Zilas, doing a presentation in accounting. So our topic for today is going to be based on final account. So this is our second lesson. Okay, final accounts are divided into two, that is trading account and then profit and loss account. So let's start with the trading account. So why do we prepare trading account? We prepare trading account in order for us to calculate gross profit. So now, how do we calculate gross profit? Gross profit is equal to sales minus cost of sales. So now the figure for sales is always going to be given. The only figure that you need to calculate is the figure for cost of sales. Now, how do we calculate cost of sales? That is opening stock plus purchases plus carriage inwards and then minus closing stock. And then if you are given any returns, that is now sales returns or purchases returns, they must be deducted from their respective accounts. If you are given sales return, it should be deducted from sales. Purchases return should be deducted from purchases. So now let's look at the format. There are two formats in how you can prepare a trading account. You can either use a T format or a columnar format. Let's start with the T format. A T format, we have a debit and then a credit side. So on the debit, we record opening stock and then purchases and then carriage inwards. While on the credit side, we record sales and then closing stock. Now the difference is going to give us now our gross profit. So that is now the columnar format that is shown there. We have our sales figure minus the sales return and then less cost of sales, which is calculated as opening stock. You add purchases, you add carriage inwards, and then you minus closing stock, which is going to give you now your gross profit. And then now coming to profit and loss account. So this one is prepared to calculate a net profit or net loss. So net profit is calculated. The net profit that is calculated will be transferred to the balance sheet in order to form a part of calculation of owner's equity. Now, when preparing the profit and loss account, we need to use the gross profit that we calculated in the trading account. So now take note, only income and expenses are used in the profit and loss account. So the difference in the profit and loss account is either a net profit or a net loss, depending on which one is bigger between incomes and expenses. So now if our incomes are more than our expenses, that is a net profit. But if our expenses are more than our income, that becomes a net loss. So now the same with the trading account, profit and loss account can also be prepared using two formats, that is a T format and then a columnar format. So for a T format, we have a debit and a credit sides. So on the debit side is where we record all our expenses, while on the credit side we record the gross profit that we calculated in the trading account, and then now we include all the incomes. So now, as we said, if our incomes are more or let's say if our credit side is more than our debit side, that becomes a net profit. But if the debit side, which are expenses, are more than the credit side, then that becomes a net loss. So the net loss will come on the credit side. So now that is the columnar format. We have our gross profit, and then we add all the incomes that we have, which is going to give us gross income. So that means gross profit plus income gives us gross income, and then from there we minus all the expenses. So that is less all expenses, which is going to give us now net profit or net loss. So as we said, if our income are more than our expenses, that becomes a net profit. But if our expenses are more than our income, that becomes a net loss. So that is the end of our presentation. Have a nice day.